I believe you need to be prepared. You're about to enter into the most competitive game in the world. So, first of all, you better put the time if you want to be successful at it. Below is a list of books you must read and 2 exercises you've got to do before you start investing. Number 1, economics and investment education. So, firstly, I would encourage you to watch Ray Dalio's video on how the economic machine works to kind of understand on what's around you in terms of how actually economics work, because investment is fundamentally coming from economics. Then the other thing that I would suggest to you is a significant number of books. So if you don't have the time to read this, then guess what? You shouldn't play. Um, Therefore, if you cannot make the time, just buy an index fund and then job done. That's what most pension funds are composed of anyway. So, in terms of the basics books, I think Making of an American Capitalist, which is an unauthorized biography of Warren Buffett, Unshakable, and Money Master the Game by Tony Robbins, I think is pretty good and easy to understand, where he interviewed most of the major investment billionaires in the planet. Smartest investment book you ever read, which is a compelling logic following an index fund approach to investing. Common Sense and Mutual Funds, John Bogle. He was the inventor of the index funds and therefore brings a lot of rationale on why they're the best assets to hold. I think the Nassim Taleb, Fooled by Randomness, and Black Swans are pretty good in your arsenal to understand actually what makes sense in investment and economics. Poor Charlie's Almanac by Charlie Munger, who is Buffett's partner. The Richest Man in Babylon, more on the concept of savings and then investing. Then, in terms of more intermediate books, I think it's What I Learned Losing $1 Million. As you can learn from what to do list, you can also learn from what not to do list with this hilarious story, really. Then the Bible of investment, really, which is Security Analysis, and then The Intelligent Investor by Benjamin Graham and David Todd. So, in my and many investors' opinions, this is the best investment book ever written. Is the foundation of value investing theory, which Warren Buffett uses. And then, speaking of Warren Buffett, I think essays of Warren Buffett and all letters of Warren Buffett are also pretty important. The most important thing and understanding market cycles by Howard Marks. So if you want to be a pro, do as pros do, So Buffett implores Marks to write more books and essays, and it's one of the favorite materials that Buffett enjoys reading. So I think it's pretty good. In terms of movies, there are a couple of them. There's The Trader, which is a TV movie from 1987 on Paul Tudor Jones. It's a bit of an example of fast-paced trading. There is also The Big Short on Netflix. Most people have already watched this. Inside Job about the financial crisis in 2008. There is Margin Call, and a couple more others, but you can start with those. And then in terms of more advanced books, I think basically Liar's Poker and Flash Boys by Michael Lewis are quite interesting as well. It's basically the story of long-term capital, a team of PhDs with unlimited resources. And then I think When Genius Fail, The Rise and Fall of LTC as well, another story of them. Big Debt Crisis by Ray Dalio to understand the debt cycles and how it influences the stock market. And then I think to finish this, it's just the classic economics. So Adam Smith, Ricardo, Keynes, Friedman, Hayek, Schumpeter, so all these people. Okay, now moving on to number 2. Start investing via paper trading, so the not real trading. So just select a hypothetical portfolio over 2 years by picking stock and how frequent you would invest and track their performance. Notice when you're inclined to sell or buy more and take note of what happens. There are also apps that allow you to play this way, such as Bloomberg, Moneybox, Investor. So there are many games like this these days. Now you can decide the type of investor you want to be, how long you're holding your positions. Are you a day trader, monthly, yearly, long term, and how you're going to analyze them. Choosing these stocks is not job done. You haven't made your ROI until you liquidate. So knowing when to sell and have planning for selling is just as important as buying. Analogously, a good poker player knows when to walk away with her chips. This exercise will make it clear what it takes to be a good investor. 3. Start investing by losing $100 in poker. Above all, I'm yet to meet someone who accurately predicts how much money they're comfortable losing. They usually just shrug off, yeah, 15% is okay. But when their portfolio starts dropping 5, 10%, they start panicking. Chances are you're going to freak out a lot sooner than later, and you need to factor this in your decisions. What you have in your mind when daydreaming fighting Conor McGregor is very different than reality. Everyone has a game plan until they get punched in the face. That's the same when you start investing. Seneca, a Stoic philosopher, was the wealthiest person in Rome, so he would pretend from time to time to lose it all. He would write off his possessions and hide them, dress ragged clothing, and survive off bread and water for a day. This was to teach him that the condition he fears, losing all his fortune, isn't so bad after all. So, inspired by Seneca, here's my suggestion: go play poker, buying $100 in chips, and living in hypothetical experiences is the best way to predict how you feel when your portfolio drops 20%. Trust me, it will someday. Thus, losing $100 should be easy if you think of losing 20% of your portfolio. All the while, you ask yourself, am I panicking? Is this the condition that I fear? Am I really comfortable with the eventual portfolio drops based on my poker experience? There you have it. These are my suggested exercise for you to start investing.